Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in this week to see the show, hear the show. We're on a number of different podcasts, the Big 8 podcasts, they call them, 5 radio stations in 3 different states, as well as if you want to see the show, go to YouTube. On YouTube, you can see it, Jeff Barton, the mortgage voice. And those podcasts, Daryl, I'm sure you got a list of them there.
We might, yeah. Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
Okay, excellent. The listening portion for the weekend listeners, the driving around, I guess you can almost get back to driving around, but there is such a threat of COVID out there. I don't know how many people are going to the hardware store or other things, but Albuquerque, Las Vegas, you can hear us on the weekends. And as I said, we get to what you can do with your refinances, what you can do with your purchases, the kind of programs that you're going to need to be able to do that, how do you qualify, all the things that are necessary in the Inland Empire and the 2 great stations out there that carry us, as well as up in the Tahoe area. And by the way, Daryl, have you noticed up in Tahoe any increased listenership to the station up there just because of all the exodus from San Francisco and Sacramento?
There's an increase in listenership, and more people obviously are staying at home because of some of the activities out there, but outsiders are still coming in to participate in some of the activities that are still available. Yeah,
it's a time right now where people are trying to figure out, we've got a vaccine that's out, but what place in line am I? Am I going to wait and see if other people drop dead before I take my vaccine? It's a very interesting time, but there is a solution. Unfortunately, it's really affecting a lot of the different decision-making that's being done out there, and certainly jobs are being affected. They're expecting a big job loss in the next couple of months due to the restaurant closures and some of the other large gathering closures, whether, as I said, whether restaurants or movie theaters or other things in certain states. Here in California, where we shoot the show and we broadcast the show and record the show, we've seen, the state itself go back to what we were almost back in March. And it's really affecting the way consumers go out into the marketplace. But in a lot of other parts of the country, especially those places like down in Albuquerque or up in Las Vegas, it's a little bit different. So if you are listening to the show and you want to, understand a little bit more about what we're talking about, just, turn on the TV or not turn on the TV. By the way, Daryl, are you watching anything on TV other than what you want to watch? What I'm saying is the news infringing upon your daily life that much?
Well, I mean, the news that's infringing on my daily life is something that is important and something that I'd like to know, right?
I see.
Well, I'm not one that avoids news sources. I stick with it and try to figure out what's going on from what's being said.
Whether you go to the right or the left, or you're in the middle, or you're way off in some other area, there's a news station for you, and it'll cater to exactly what you want to hear and keep you coming back. I think the fragmentation of what's going on in the marketplace is, if it was run, how can I say it? If it was run like the mortgage business, really, most of what we offer is the same from most lenders. Now today, on the show, a little later on, we're going to have somebody from FGMC, and they're going to talk about non-QM. Well, non-QM for that company is a lot of the same as non-QM for every other company. We're pretty much sameness. You can get a mortgage if you qualify in these parameters, and whether that's QM, non-QM, whether that's hard money, there is a set of facts that you can get, and you can understand whether you can get the loan or not. And that's pretty good. And like I say, whether you're watching different places in news or listening to different ways, you can get what you want to hear. But in the mortgage business, it's about, can you qualify? And part of what makes it that you can qualify is obviously the amount of money you make, the credit score you have, whether you're going to keep that job and how long you're going to keep that job for. These are all the things that a lender think about it. If you're going to lend money to somebody, anybody, $10, $100, $1,500, or how about $200,000, $300,000, $400,000, you're going to make darn sure the person that you're lending the money to can pay you back. I mean, it's not your uncle, your brother, your friend. This is how we do the business. So if anything else in this marketplace can set you at ease, it's that the mortgage industry is the same. Now, is the mortgage industry fair? We can talk about that, and we will talk about that. Is the mortgage industry the same for you as it is for somebody else? Maybe not. And it's always couched in the, it's about you. But a lot of lenders have their own, particular guidelines internal with how they're going to lend to you. Now, we talked about companies going public, whether it's Rocket Mortgage or whether it's United Wholesale, and how that affects you. In the good times, it won't affect you that much because the stock price is up. But in the bad times, when the stock price is threatened and you've got shareholders in revolt, people are going to be more conservative. Those two companies, which are the largest mortgage companies in America, are going to be more conservative. Now, is that good for you or is that good for the shareholder? That's an issue to deal with, and we've talked about it, and in terms of how we're going to deal with that. So we want to make sure that when we're talking mortgages, that you know where you can get the mortgages, and that's what we talk about on the show. What are people that come on as guests? They talk about who they're working for, what kind of mortgages they're getting, what mortgages are available out there. Now, let's get right to some of the news to use section of the program, that I like to call it. Used to have Dr. What's his name? The mortgage doctor on, R.B. Abramian, all the time. And we used to banter back and forth, then get right to the hard news. So let's get right to it. 30-year fixed rate loan, 2.8%. 15-year fixed rate loan, 2.38%. The FHA loan at 2.33. Jumbo's at 3.14. And the 5/1 ARM is at 2.42. All of these are great rates. The caveat to that, I guess, is that the bond market is it's in a range, meaning that the yield that 10-year treasuries are offering is in a range of, where is that range? It's here somewhere. Yes, 0.87 to 0.96. Now, it has yet to breach the 1 point threshold. Now, that threshold, once breached, we're not quite sure where we're going with that. And I think a lot of this has to do with, are we going to get COVID relief before the end of the year? If we do, how is that going to affect bonds? And if bonds go up, you know what's following bonds, meaning if the yield on the 10-year treasury goes up above 1, you're going to see rates increase too. That is the traditional mark by which we look at how rates are derived. That too is as constant as you can get. Now, we've had the Fed intervene with mortgage-backed security purchases as well as treasury purchases to the tune of $120 billion a month. How is that affecting your rates? It's artificially keeping them low. That's a good thing because we all know that the real estate market is sky high. So, all right, let's get to some other things. Overall, foreclosures are down 80% from a year ago. Now, this is also due to the moratorium on evictions from rentals and evictions from mortgage foreclosures. So 80% less than it was a year ago. It has been extended to January 31st. I think that's a good thing. I think the Biden administration, when they get in, will also continue to extend. I don't think they will give it a flat 6 months. They may go 3 months at a time. I think that's a good thing too. I think in the middle of April, you're going to see a scaling back of the purchases of mortgage-backed securities and also from treasuries by the Fed. This is my own personal opinion. I think they want to see rates rise, but not too much because we still haven't addressed what's going on in this housing shortage, which we'll get to in a different segment today. We always talk about that because it's at the core of why real estate prices are so high. Everybody knows that too. Home equity, that means last year at this time to this year at this time, how much did your house grow in value? $1 trillion in 2020. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening to the show. The mortgage information we give out on a weekly basis is really here to help you, make some decisions. Either you're thinking about buying a house or refinancing. These are the two major decisions you're going to have to make financially in your entire life. Now, maybe most people do maybe 3-4 of these in their lifetime. So for you, this is information you can use. We bring to the show guests who know a lot more about it than I do. Now, I've been in the business about 25 years, and it constantly changes, and the ability to get a loan and how to get a loan constantly changes. Certainly today, because of COVID, certainly today, because of the upside-down nature of the political atmosphere that's out there, and certainly today because we're just not quite sure how financial markets are going to respond to the new administration once it gets in office. So all these things are going to affect your mortgage rate, and how that mortgage rate is going to go up or down is really what the show is all about. Today, bringing more information to us is Connie Hernandez from PMA. She's been on the show many times, kind of our local expert out in the Covina area in Southern California. Connie, how are you?
Fine, thank you, Jeff. Thank you for having me, Jeff.
Thank you for coming on. We were talking off air about taxes and about how certain states, certainly California, has gone to a different way of thinking. You and I are entrepreneurs, business people. We try to make enough money by ourselves. We're not looking for any help, but we're not looking for any interference either. And I was talking about how California itself has gone to a different way of thinking, and has been for quite some time, and it's very difficult to do business here. So I was telling you I had a story. Okay, so private mortgage insurance, this is on the federal level, I've had for years, and I turned 65, and I just got another statement from Medicare that said that I owed, I don't know, it was $600 a month. Now, when I was getting private insurance, it was cheaper. So I'm thinking, well, why did I pay unemployment insurance and workers' comp and Medicare and Medicaid insurance if my payments after I'm 65 go up? It's just insane. You know why? The basic, and what we're talking about in terms of the socialistic attitude, both here in California and in a lot of places in America, which everybody is sick of, is the fact that you can afford it. So you're now going to pay for somebody else, which is, to me, un-American. What do you think?
Well, I have to be candid with what I really think, correct?
No, you don't. You can couch it in very nice things, and
Well, yes, I mean, for coming like yourself, I've been in the mortgage industry and real estate industry now for 25 plus years, been
right.
through the motions that we've gone through, weathered the bad weather, and still here, never looking for any handouts.
Right.
And I both know as self-employed, we don't work from 8 to 5. It'd be lovely if we did, but that just doesn't happen.
Right.
If you're just like any self-employed person, whether you own a restaurant, a salon, any of those businesses, you put in your heart and soul into your business,
right.
hope to grow, and by doing that, we employ people. We help people grow with
yep.
us, and we hope they stay with us long term. And we even encourage them, I believe, because at one point we were encouraged to go out and open up our own business.
Absolutely, that's the way it is, right?
That is our mindset, and for me, it's just heartbreaking. Literally, like you said, that my taxes could possibly go up, or California taxes for businesses, 16%, to cover those people that choose sometimes, for the most part, not to work. And I don't know about you, but I mean, work permits, and now I'm going to age myself, but work permits used to be handed out when we were like 14, 16 years old, and I've been working since. And I believe that what we have in life is what we work for. We plant our seeds, and I just feel that businesses, the way we grew up thinking that would be an ideal place to own a business in California, that's changing, and it's changing at a remarkably drastic rate right now. It's a shame. I understand COVID has had a huge impact, but on top of COVID now, to have to deal with all of the new regulations that are being pushed through our political system for people that are self-employed, maybe have a job, and are driving part-time to make ends meet, to get that child through college, for whatever
Right.
their motivation is to have a 1099 type of income, like, delivery services or all these multitude of businesses. And these big companies are leaving California because in order for them to be profitable, to turn their 1099 employees to W-2 employees would be devastating, or just would not make financial sense. And for us, smaller businesses that hope to grow, it just prolongs the process of the possibility of growing. And I just cannot say enough how badly all of that is eventually going to trickle into people being able to afford a home, even being able
Yep.
to afford to rent, for that matter.
Well, it's coming, and it's coming. More taxes, more businesses leaving. That this drain on businesses been happening for 10 years, maybe a little bit more. And I think the issue in local politics, state politics in any state, has to be balanced between the interests of people who don't have any or don't want to go get any, to those that do have that. Because like you, I employ 100 people. And so these are all 1099 people who are working in the mortgage industry because of what we can provide to them, make a great living, and pay taxes on their own. Now, if we get switched to some other taxable, there'd be no way I could maintain my business. And if that's happening across the board, I don't know what we're going to do. Because like you say, how are they going to afford a house? I don't think they're going to be able to afford a house. And then what happens? Then you get into a situation whereby they have to rent. Now, we don't have enough rentals as it is. We don't have enough homes to purchase as it is. So it's kind of what I wanted to talk about. What's it like out there with buyers who can't buy, renters who can't rent? Nobody's paying the mortgage anyway if you've got COVID-related issues, or paying the rent. This is not a formula that's looking pretty good.
No, it's not. Unfortunately, there are those people that are still, in a strong financial situation with stable jobs. I mean, these are jobs, but it's all very shaky because we just don't know what's coming. We just don't know how long you can keep pulling that rubber band and expect it not to burst.
Well, I think many people in government are either unwilling or just never worked in the private sector. It's got to, you have to look at what has driven California. It's the entrepreneurship. It's the ability to be able to say, hey, I want to go out there and do something and keep the money that I make. Whether it's large companies, the idea that you get here, you get medicine, you get medical, you get unemployment, you get, a stipend when you get old. Okay, these are federal programs, but the state wants to take over responsibility for those that, still want that. So what happens is you get in California, people moving here to take advantage of that, and people who have to pay for it, they want to leave, go to Texas, Arizona, Nevada. I mean, that's what I see. And in California right now, we have about 30,000 people a month leaving. They sell their house here and go to another state, buy cash, put the rest of the money in the bank, and they're happy. But how long are the real estate prices going to hold if, in fact, this is the drain on the economy from a job standpoint?
Oh, you're right. You're absolutely right. I listened to quite a few interviews with different financial experts and CPA firms, you know, people that own and run major CPA firms. And that's exactly what you said is exactly what they're saying, that their clients are leaving. But here is something really interesting that people should be aware of, especially for those I know you, like myself, we service small to mid-sized businesses because, you know, that's who I mostly cater to in my area.
Mm-hmm.
I'm calling people that own businesses, and we cater to them. So one of the things that we were warning people were, okay, if you want to relocate, be ready to tackle being harassed by the
Right.
IRS. You know,
Oh,
they want to be able to prove without any doubt that you are officially moved into Nevada or Texas,
right.
and you have actually relocated.
I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
This discussion is at the heart of why, I loved California when I got here many, many years ago, and it has changed since that time. And I don't know, I guess the pandemic has really brought up a lot of, because the state is looking for money, right? They're always looking for money. My town is always looking for money. Part of the housing problem is the fact that the taxes are just making it difficult for people to build a house, sell a house, make a living from that kind of, because there's so many taxes and exactions and things you have to do that there's no incentive for anybody to come here and build large scale development anymore. Just, it's not happening. I remember when there was a plan by which we were going to build, and this is back in, late 80s, that LA was going to expand way beyond the Palmdale area, and it was going to, Victorville, and all these areas would be filled in with housing. But that never happened because it just, like up in Hesperia or up in Paris. I mean, there are some development, but not the massive development you need here in California because people are afraid. They don't want to get into a situation where they've overextended, and these are 10-year projects, and all of a sudden, the economy or the state changes the way they're going to handle what you're doing. To me, the housing problem is the problem in the state, is the problem in the country in terms of mortgages and how we're going to get people into housing, and it's why the housing is so expensive right here.
Well, thank goodness I'm just a little person, but some of the things that I've been listening to on some of these talk shows, really serious conversations about major issues. And like you, I live, I'm blessed that I live in a nice home. I live in a nice area.
Yep.
But I also pay taxes to live here. Very steep taxes to live here. And I will be the first one to say and say the reason I'm here and with all humility is, I grew up in East LA, and
right.
I've seen everything from not having to gradually having to now feeling comfortable because of hard work.
Right.
Hard work and desire to succeed. And that, I think, is the same for many entrepreneurs. So what hurts me is that, the homeless issue. There's just, I'm paying taxes, but I can't even feel comfortable going for a walk without worrying about who I'm going to come across. I mean, that's a major problem in California now. I mean, I've been here in Covina now for 16 years, and I think when I first moved in, there was a couple of people that would walk the streets, just maybe 3 or 4, and now they're just everywhere. I mean, I just don't understand. So one of the topics that we were listening to is the problem is mismanagement of funds at all levels of government.
Well,
You
It's
know?
Ronald Reagan who said many years ago, government, what is it? Government doesn't solve the problem, government is the problem. And I think in a large problem is that each successive person who gets elected wants to make a mark. And in California, that means let's spend somebody else's money on something that I think is a good idea. Now, whether that is a good idea or not is not the point. It's the spending of other people's money that's the point. Most people can spend their money just fine, and that's a very conservative way to look at it. But as a person who has to run my own household, my own business in order to make a profit, in order to stay within a budget, I think the state of California is always looking for ways to spend as much money as they can, and I don't think a lot of that money is spent just locally. We had a project to build. It was called Safe Walk to Schools or something. Now, we had sidewalks, but they wanted to build a different kind of sidewalk made of decomposed granite and these railroad ties lined up. Now, okay, so whether you like it or not, but the budgetary process by which most cities and states and the state of California uses means that this money is allocated for X amount of dollars to be spent for a long time. So if you apply, and I'm like, how does that make any sense? Why are we spending money on something like that when we really have, you want to repave the street is one thing. But to me, yeah, who's making these decisions? I have no idea, but it's not an equal.
Walls on freeways that I still can't figure out how that ever even happened. Again, lived in California since I was probably 5, 6 years old. We've always had freeways.
Right.
If you move close to a freeway, you assume you're going to hear the noise from the freeway. I mean, right? If you don't want to listen to the freeway, don't live close to the freeway.
Right.
So we must have miles and miles of walls. I mean, I'm talking probably 20-foot walls.
Yep.
Very, very expensive walls that were built all along the 10 freeway.
Mm-hmm.
And mind you, one day I'm driving in traffic, and these are pretty walls, very beautiful walls.
Mm-hmm.
And
Expensive walls.
Manually, people are sponging these walls.
Exact sponge painting them? Is that what they're doing?
They're sponging these walls for texture and color manually.
Right.
And I'm thinking to myself, not only have we never had walls here in, my lifetime,
Right.
and all of these are along shopping centers and, small, little shopping malls. Some residential, of course, many go by residential, but if you I don't know if you drive out this way very often, but starting from Covina going all the way to, Pomona, we have these massive walls that took, 3-4 years to build. I cannot even imagine or fathom what kind of budget they put in for that.
Right.
And
right.
There's homeless people needing housing, needing psychiatric care, medical care, whatever it is. But they need to get off the street, and they need to house them somewhere, and they need professional people taking care of them. But yet we have these walls that their only main purpose is to keep the noise out of the community.
Right. I don't know. To me, the priorities and how things get allocated, you could have a budgetary item that was approved 3 years ago that just comes to funding today. And do I have the answer? No. But one of the parts of the answer is to get two sides, not just one side, because all they want to do is sing louder than the guy next to them or the gal next to them. You got to get an opposition to say, no, wait a second. And one that has some teeth to it. Because here in California, it's just one group of people who run everything and have for years. It's just, I don't know how to solve that particular problem. But
I like you love California, Jeff, but
right.
My entire life I never thought I would consider moving. And as time goes by, I listen to my children, and I'm finding fewer and fewer reasons to stay. So thank goodness you are approved in multiple states.
Well, that's good. We were Malibu Funding, the sponsor of the show. Who I work for, they're approved in a couple more states now, Minnesota and Idaho. Idaho? Yeah, Idaho. So there's a few more opportunities here on the West Coast. Some of these places are nice. Um, I have a lot of family who live on the East Coast, South Carolina, North Carolina. Very nice places, Virginia. Very nice places to live, and the climate's not too bad. Although they're getting walloped with a snowstorm today, I think.
Yes, yeah.
Yeah.
That's the only thing. We give up our weather, but
Yeah, that's yeah. I'm spoiled by the weather. You're right. Anyway, Connie, I appreciate the candidness and spending some time with us here, blowing through one of our time gaps. But yeah, it's frustrating. Like you, been here a long time, and run a business for a long time. It's just discouraging when you see that it's more harder for people to keep what they make because others decide they know how to spend your money better than you do. And this is an old Republican kind of cliche, and I'm in some ways very conservative fiscally, very liberal in other ways. So I guess I'm like most Americans, just a little frustrated right now and not sure what the answer is. But I thank you for coming on the show. I really appreciate it.
well, thank you. I appreciate the talk. I like always. We always have some really interesting conversations.
Right. No, that's good. I really appreciate it. Thanks, Connie. That's Connie Hernandez from PMA. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in and listening to the show. Hey, you know what? We're on the Big 8 podcast. Daryl, you got to list those podcasts for us?
I sure have.
Thank you.
Scroll down the spreadsheet here. We've got that information. Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and YouTube.
And also on YouTube, we shoot this show for YouTube as well as a couple of the radio stations that we're on. By the way, we're on 5 radio stations in 3 different states, from Albuquerque to Las Vegas, the Inland Empire, and Southern California, up in Tahoe as well. On YouTube, if you go to Jeff Barton, the Mortgage Voice, you can see this show, and you can see hundreds of others that are there. We also do a daily 1 to 5 minute quick mortgage minute for Facebook and LinkedIn, as well as Instagram and some of the other local and smaller social media outlets. Appreciate you listening. With us now is Charles Giscombe from Malibu Funding out in Nevada. He's manager out there, as well as just a very experienced loan officer. I wanted to ask him on the show. First off, Charles, how are you?
I'm doing great, Jeff. How are you?
I'm fine. Thank you very much. You a little COVID fatigue? How's it going?
Jeff, I am going pretty good. Just trying to stay healthy, stay under the radar. This opportunity does give us a lot of time to learn new programs and to get familiar with more new things since they're being introduced back into the market. So actually, it is a good time as well as it is through the pandemic. It gives you some time to get your chop sharpened back up, Jeff.
Oh, excellent. Okay, so tell us about some of these newer programs you're talking about coming back into the market. I guess you're talking non-QM?
Yeah, absolutely. A lot of non-QM. It's so funny. We always talk about this, but the non-QMs have been coming in the market, and early on, it was a small percentage of them now, but 30-40% of the loans being done now are non-QM loans, meaning non-qualified mortgages. Non-traditional, for those people that are not so loan-friendly and familiar, that just means loans that are not of the FHA, Govy loan, or the Fannie Mae, Freddie Mac type.
Right.
These are loans that are more based upon the individual's ability to repay. So that's what a non-QM loan is, and you can qualify in the non-traditional way of possibly bank statements, things of that nature. They do also have some new stated programs that are out there that are going to rely more on the property ability to have value, as well as the borrower showing their ability and their credit profile showing strength and seasoning. And so those programs offer individuals to still be in the market, and it's a lot of them coming back out. Obviously, the pandemic has stopped a lot, but there have a lot being reintroduced now that the election is over and things are stabilizing, Jack.
You know, we've had on the show last couple of weeks account executives from several of these non-QM lenders, whether it be in the commercial realm, whether it be in the DSCR, whether it be bank statement type loans, and they're excited about 2021. One thing that I wanted to ask you is, in California, there seems to be some, and I had Connie Hernandez on in a previous segment talking about some of the difficulties, and we were both talking about difficulties of government getting in the way, either overtaxing people or trying to direct funds that comes into the city away from what would solve a lot of problems in the housing area. What is it like out in Nevada? What is it like in some of the other states that we do business that I know you're very familiar with, whether it's North Carolina or Georgia or Illinois, some of these other places?
I mean, you're going to have some of the similar difficulties, but I'll be honest with you, a lot of these businesses and companies understand the difficulties and the things that are occurring, and so they're making it more lenient in regards to guidelines for people in the market. Absolutely. And Jeff, I'll be honest with you, I've been seeing more files come through the door that normally we may not be able to get approved from a traditional loan standpoint based upon the things that you're talking about. And a lot more of them are getting approved, and they're getting their experience.
Are you there, Chuck? That's Charles Giscombe. He'll probably call back in, talking about the non-QM sector and the availability of funds and how the funds themselves are more available than, let's say, they were, last month, the month before. In regards to that, the credit is more available on jumbo and lower FICO scores. This is part of the news to use section we didn't get to. Interesting part of that is that the products available to those particular borrowers are going to cost more, but there are more available today than there were 3 months ago.
Charles is back.
Chuck, hi. Sorry I lost you. Are you there?
You hear me?
Yeah, I hear you fine. Thanks. Go ahead.
Yeah, I'm here, guys. I'm here.
Okay, so we were talking about non-QM, and we were talking about the availability of funds more now, so in programs that weren't available maybe 3 months ago that are available now.
Absolutely, Jeff. There are a lot of new programs. A lot of the older programs are coming back. A lot of the old LTVs, loan to values that they lowered during the pandemic, are now back, raising them up, from, where they were at one time, all the way up to 90%. Listen, I tell people all the time, the more these programs start getting introduced into the market, the more obviously they're going to create some comfortability. And with different investors and backers, obviously, comes more comfort and flexibility. And what happens is the interest rates that used to be a lot higher are now becoming competitive with the traditional rates.
Right.
And so, in that realm, individuals, they are higher. The interest rates are higher because they're asking for less documentation. They're not asking for tax returns and things that we traditionally would ask for in a conventional type of loan. But what happens now is these interest rates are getting lower. So now they're not considered hard or high. You can get into a non-QM loan as low as 4% now. And that's amazing.
That is amazing, especially when you're talking even a year ago. That would be unheard of. I mean, that was a conventional loan, 30-year fixed, 20% down purchase would be about 4.25. Of course, they're now down into the low threes, high twos. So a jumbo loan, a non-QM loan at 4% is just fantastic. And that really opens up a lot of new borrowers. I understand that in terms of new borrowers and people that are looking, we deal with a lot of these type of people. Give us an example of how you're talking to people who might not normally look at a loan, a conventional loan, who now can look at the non-QM. I mean, this is an opportunity, obviously.
Yeah, I mean, you know, it's almost like they don't even believe us when we're talking to them sometimes, because you'd be surprised at how many people feel left out of the game because they feel
Right.
like, you know, I'm not traditionally what they're looking for. The banks are looking for individuals that can show employment, they can show their W-2s or paycheck stubs, and they're looking for their tax returns that they can get a 4506T done on so that they can, you know, just verify all this information. Well, a lot of these people, a lot of business owners, a lot of entrepreneurs, individuals that run their own businesses don't get paid that way. And obviously what happens is, you know, when you're running your own business, there's a lot of expenses and you write a lot of things off. Well, if you're writing a lot of things off and your tax returns come back, they're not going to show you making as much.
Right.
But one thing you won't deny is that money that's coming through the door is going into a bank account, and if you can show that money is coming into your bank account, whether it's your business bank account or your personal bank account, you now are showing the ability to repay. And when you show that, there are investors that are saying, that's good enough for me, because as an entrepreneur, one of your expenses is going to be your home. And so
Right.
if you're utilizing that money and you're working out of your home, then by all means, when that money comes through the door, that's going to be there to take care of you, take care of your office, take care of your things. So you should be able to utilize that income for the purchase of a new home. And that's what these investors and these new programs are doing. They're saying, listen, you have the ability to repay, and based upon all your liabilities, your debt-to-income ratio with these deposits make you qualifiable, and you can financially take care of a mortgage. And that's how you get approved. And what I tell people all the time is, hey, listen, the debt-to-income ratio is happening all over the place, but your bank statements are going to show you make way more income than your tax returns do, mostly all the time. So if that's the case and the bank is okay qualifying you that way, you may think that you're not qualifiable, but take a look at what you're doing on a monthly basis and you'll be surprised. And let us run an analysis on those and see what your actual monthly income is. And you'll be surprised that you more than likely will qualify.
Hey, dude, Chuck, shout out your phone number for people. I'm up against the clock here. Sorry about that.
Not a problem. Hey, listen, I could talk about that all day. You know, Jeff, I enjoy it. Love solving problems. My number is 702-328-5191, 702-328-5191, or you can reach me at charles@malibufunding.biz. That's charles@malibufunding.boy, Isaac, Zenith.
Chuck, thanks very much for coming on the show. Really appreciate it. Sorry, we're just up against the clock. And we'll have you back real soon.
Jeff, thank you guys so much. You guys stay healthy and safe out there.
You too. Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening in, tuning in each and every week to get the mortgage fix that you need. Now, I know there's a lot of people out there who surf the net. One thing that a lot of people don't do is surf the mortgage net, meaning that there are tons of places that you can go online for mortgage information. Housing Wire is one of them. Mortgage News Daily, that's another one we've go to for years. We try to get people from those entities onto the show to be able to share with you. But if you want to, tune in or go to those particular places to see what's going on in the mortgage market rather, it's a really good idea. I get a lot of information from them. And one of the things that I was looking at on Housing Wire yesterday, interesting, we've been talking about it for quite some time. And how do we fix the shortage in housing? That's That's a lot of what's going on in the mortgage market. Obviously, the mortgage rates are great, but real estate prices are really high. So how do we make sure that the millennials who need to get into the mortgage market, into the housing market, can afford it? We know that at the low end of the spectrum, and there's a lot of millennials, a lot of Gen Xers actually, Gen Yers in the low end, they right now can't afford a house, even though they probably could afford a mortgage. Now, if they've lost their job, obviously all that's out the window. So one of the things about housing is that they came up with several things in this article on housing, on a Housing Wire. It's HW, if you look it up on the internet, is there's three things: regulation, taxes, and profit. These three things together are solvable problems that could increase housing this year in 2021, next year, almost this year. So let's go through three of them, all of these three, according to what Housing Wire is saying. The regulation. Now, I've talked about this on the show ad nauseum. The regulation in different municipalities and cities make it difficult for the entrance into the market if you're a builder. If you're a homeowner who wants to build, if you're somebody who wants to build a development, it makes it costly, time-consuming, and almost, I mean, you really have to have a desire to do it. I've done it. It's not easy, but I haven't done it in this market. In my own hometown, we live out in California. There's a big fire in 18, burned about 500 homes in my town. Now, to date, this is 2+ years ago, only 16 of those 500 homes that burned down are rebuilt. Part of that is money, but most of it has to do with the way municipalities issue permits. And if you're out there and listening to me, you know what I'm talking about. But the problem to be solved is local, city by city. And unfortunately, each city has their own, I guess, fiscal needs, which is why it slows down. And they have their liability needs. There needs to be some legislative fix for that at the state level so that counties, cities, towns, and unincorporated county land can have advantages that they don't currently have to speed up the process to build, because we need more housing. Taxes. This one I'm not quite sure. The rationale for taxes. Now, it's not taxing less so people have more money to build. No, it's not that. Their answer for taxes was tax people who have it so that we can then pass the money on to people who don't have it through, cheaper fees or monies to be able to use in building per se. Now, I'm not a great fan of taxing. I'm a great fan of some taxes. I'm a great fan of the ability of governments to regulate, but it has to be done in a way that doesn't kill the incentive to go out there and make a buck. Because in the third one, profit, okay, so I built some infill deals. And an infill deal means that you've got several houses in an area, but you've got 2 or 3 lots within those 7 houses that haven't yet to be built. To build on those 3 lots, that's called an infill deal. I've done some of that. You get plans, you look like you're going to build a single family home for yourself, and you go out and you build. Okay. If in doing that, you couldn't make any money, nobody would do it. And the way to easily kill anybody's ability to make money, tax them, or the threat of taxing them. And anybody who talks about taking money from one group to give it to another group, this is what kills a lot of these grand plans, is because most people want to keep the money they make, do what they want to do, and to be able to, make a profit in so doing. Hard to do that when the tax is so high that it's unbelievably hard to do. You already get taxed on your property, right? Everybody knows that. In California, they've been trying to chip away at this Howard Jarvis initiative that passed in the 80s, which is 1.25%, maybe some exactions. In other states, they have not the luxury of property tax, but they have lower sales tax. every city and state and town in the country too, is broke. Always broke. There's never a time where you see some states say, you know what, we're flush with cash, we're not taxing you this year. Never going to happen, because there's always people who want to spend your money. Now, as a person who believes that, yes, taxes are necessary, I got to drive down the street, I need electricity, but in terms of housing, taxing kills the profit motivation. The profit motivation is the only thing that is going to add housing. Now, the third or the fourth wheel, the one I always talk about, there was a great article in Yahoo today, and I read it, and it was about the tiny home revolution, and it talked about nationally how the tiny home has caught on. It's good. Now, the tiny home, depending on who you're talking to, means several different things, and there's a huge worldwide wave on it, right? How do we get the modern conveniences and all of the luxuries of the grand living into a space of 4 feet, right? I mean, that's basically what tiny housing is. However, in solving problems of houselessness, people who need to live somewhere, people who need to be able to afford, the threshold to be able to get into the tiny house is so much lower than it is if you want to get into stick-built in any town in the United States. Go to any place and you'll see that prices have made it almost impossible for the median home income in that particular area to afford that particular house, unless it's a 2-income family. Now, I'm not against a 2-income family or 3, 4-income family. I'm just saying, in traditional America, where you want to have a family, you want to have a partner, spend a lot of time raising children, and a partner out making a living, this is now, because of the cost of housing, impossible. And I'm not advocating for one group over another group to stay at home. I'm just saying, if that's what you want to do, it's almost impossible to do. The only way to do that is to lower the price of housing, or give everybody a big raise. So tiny housing at $30,000 to $60,000 a pop, where your average home being built in America is, $250,000, $350,000 in that range. Well, you can see the difference, and most people could afford that. The only thing that we need is cheaper land. Now, every city and state in the country has land that they're just have. Whether it's, they're trying to allocate it for parks, or they're keeping it back for whatever they're keeping it back, or it's too small of an area to actually develop because of the setbacks and blah, 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 everything else we talked about in regulations. All of these things can be adjusted to be able to fit the tiny home, to be able to afford for low-income people to get into a house, and I think that really helps the housing crisis. We didn't get to a lot of what I wanted to get to, but I wanted to make sure that the plan that Housing Wire came up with in terms of increasing housing, and my little footnotes after that were included. Anyway, I'm Jeff Barton. Thanks very much for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.